I'm giving away the strategy that appears once every 2 days, and it's guaranteed to give you at least a 1 to 5 or higher if found correctly in the market. Here we go. Now, this strategy, I'm going to break it down in such a way that anyone can plug in and profit. Number one, you are looking for a session sweep. That's honestly a great way to find where your bias is going to be once, liquidity of that session that was created is then swept. The market constantly goes in that cycle. It's creating liquidity, sweeping liquidity. It's always going to be in that cycle. And number two, make sure your order flow aligns, meaning multiple time frames. In this situation, right, I'm focusing more on the higher time frame, right? Because that's going to help you build your bias. If it aligns, it's going to play out most likely in that way. You're just playing the game of what's the highest probability. That's what you're doing. And then the next one is enter on transaction on the lower time frame. It's so simple. That's the strategy in a nutshell. Now, how you approach it is what's going to change. And actually, there's a lot of people that attempt this and they don't do it right. And they just call it quits and they just think the strategy doesn't work. It does work. Just, it needs to be implemented, corrected. Yeah, I'm one of those people, way back in the day that honestly thought that this was just not it for me. It just does not work. But then as I back tested, I found different little tips and tricks that, wow, it just completely changed my whole mindset. So I'm just going to slowly mark out, the different time frames, because how I like to break things down is 3 time frames, right? So the first one is 4 hour, right? That's going to help you figure out your bias, the overall direction in the market. If you don't have your bias, there's some people that flat out don't even look at the higher time frame, and they're mostly scalpers. Hey man, it's everyone each their own, but I feel that is a very, very important part of this strategy. So 4 hour, I like to first mark out, okay, when was the last break of structure? Beautiful. That was the last break of structure. Now I'm looking for the market to then pull back into that range, right? So meaning every time there is a break of structure, a new range is created, those swing points. You want to look for the market to pull into. So kind of like on the 4 hour here, you're looking for it to pull back into this new range, that higher high, right? And that higher low. You want to look for it to pull back into it. So I'm just marking it out here on the 5 minute, just so you kind of see, right, what I'm looking for. So I'm looking for the market to pull back into it. And the expectation is you want to aim for that higher high that was created. That, in this particular case, you're looking for longs, right? So just to kind of show you guys and kind of give you guys an example of how it looks, right? As it pulls in, it's crossing that line where it broke structure, right? And ideally, I mainly look for an Asian session during this pullback. I don't want to, limit you guys to only that, because there is different sessions that this will work on differently, compared with another asset. But me in particular, I'm usually trading, NQ, ES, I'm trading NASDAQ, S&P, stuff like that. That's where this would work, in this particular situation. So I'm aiming for the Asian session, right? It pulls back. Then at the very end, it sweeps it as it's breaking into that pullback. Beautiful. That's what I want to look for. And as that plays out, then I want to look for these particular break of structures here, right? So as it sweeps it to the downside and then break structure to the upside in this particular case, once I have all of my order flow slowly aligning with that, right, that's when I'll start hopping into the 1 minute time frame. During the 1 minute time frame, I want to look for a structure kind of similar to this. It's going to look pretty much the same as the higher time frames, or at least the mid time frame. But what I'm looking for is a sweep to the downside, right? Mainly to sweep the end of that range or that previous session. That would be ideal. Then I want to look for it to slowly pull back after it's breaking structure to the upside. I want it to pull back and kind of form the transaction I'm looking for. So we're trying to figure out who is in control here. Is it supply or demand, right? We already proved to ourselves that, order flow is aligning from the higher time frame, meaning it was breaking structure to the downside, then switching to breaking structure to the upside. Beautiful. Now, what we want to look for in the lower time frame, mainly, let's say our entry time frame here, is we want to look for something kind of, I know it kind of looks like a cluster here, but it's going to make sense in just a second once I start marking out these zones. So now we have, obviously, there's demand that's slowly showing that it's in control. Okay, we have the first one. Beautiful. Then we start developing the supply. That's what we want to look for, right? A supply that's not just there just to look pretty. No, you want to look for a supply that has a reaction, right? It's committing to that. And once it has a reaction, right, it's respecting it, but that's just showing us that it's valid and it's 100% there. Then you want to see that it blows through it afterwards, after it reacts to it. Once that happens, that gives you the go ahead that, okay, this demand is in control. Now, it just breaking structure to the upside, those minor structures there, that's just a given. That's just an extra bonus on top. But once you have that, now you can safely say, okay, I can enter off of this next demand. And once you have that full setup, that full rundown of exactly this, that's when you can go ahead and enter. Now, if you want to sit back and, be very cautious and look for something extra, I suggest this is all you need. Personally, this is all you need. A lot of people like to look for all kinds of other stuff to align. I always tell people this: when creating a strategy, and not even creating, just because at this point there's so many strategies out there and nothing is, let's say someone created. We all take bits and bops from every piece of strategy we see on the internet, or we learn from our mentor, or we learn from our buddy, whatever, and we slowly generate and adapt and create our own. That's what we're doing. That's what everyone does. Now, there's a bit of a discretion that is needed from time to time in cases like this, where this is enough for me. I used to look for so much to align, and it gets to a point where, let's say, when you're on the live market, you don't even take the trade that is 100% valid just because you have so many things that you need to check off. Don't have too much and don't have too little. Have enough that it makes sense to you. When it makes sense, that's when you get to a point where you can start back testing it, and it goes from there. So once the 4-hour broke structure to the upside, beautiful. You're looking for the same thing. It pulls back. We're in that range right now, right? As it pulled back, we're looking for the exact same setup I just went over previously, right? Now, let's go ahead and hop into it real quick. Now we want to look for the same structure to happen again. So right now we're in the zone. We can start looking for that same setup. Beautiful. Now, keep in mind, this is a bearish setup. We're looking for a short here. So I'm going to go ahead and mark out the previous low. We want to see the market play through it, right? And once it plays through it beautifully, we want to look for it to then pull back into that area. Now it's its own little range. Now we're on the entry time frame here. Like I said, trading can be simple. You just have to make it simple enough for you to understand and make, obviously, I don't like to say it, but it's true. You're making an educated guess based off of what's in front of you, right? Trade what you see, not what you think, right? So in this case, I'm marking out a demand. I'm trying to find who's in control here. I want supply to be in control, but we have to prove it first. So, okay, beautiful. It reacts to that demand, but that supply obviously is in control here. So the only thing that we can do which I didn't really pay too much attention to it, which it did sweep the previous high, if you see on the left side there. But that's just an added bonus. That's what you, like I said, that's what you look for. It played into that demand. It had a reaction. Beautiful. Now that we have that ideal setup, the best thing we can do now is go ahead and have the expectation that it's going to slowly play into that supply, tap into it, fill it, and that's where it's going to distribute, or some people like to call it riding the wave. That's where the wave's going to obviously continue. It already started. We're just finding an appropriate way of entering it. All of it is, what is the highest probability? And in this case, this seems to me to be the highest probability. Now, yeah, I don't know. Yeah, I think it was like, I think I actually took like a 1 to 5. I gave myself a little bit more space on the stop loss. And I think it was kind of, yeah, it was kind of close. I think I gave myself a little bit more of a stop loss. But nonetheless, it was a great trade. And usually when I have trades like this, that it usually takes longer to hit TP, but this one was kind of quick. So when I run into trades like this, that I just had a really good week, and it helps me end the month off really well, right? Kind of early. I like to take some time off of the charts. I suggest you do the same thing. Don't overtrade. And if you have any questions, you're more than welcome to reach out to me. And as always, stay profitable.